Hello, my name is Ali Carter. I am the founder of Mediate UK, and I'm joined here today by our most experienced mediator and PPC, Ian Lovett. Hi, Ian.
Hello. Hi, good morning.
And today, Ian and I are going to have a chat about finances as part of your divorce. And specifically, we're going to go through disclosure, how you disclose your finances, why you need to do that. We're going to look at the division of assets and also this issue around any ongoing payments between you. Now, this is a huge topic, and so we're going to set it up today. Ian and I are going to have a chat around it and try and incorporate into that many of the questions that we get asked, and try to cover off why we do things as we do them at Mediate UK, or why your solicitor might be asking you to do things a certain way as well. And fingers crossed, we hope that this will help explain some of the minefield around finances on a divorce. So welcome, Ian. I'm going to just ask you really to start off by saying, why are finances as part of a divorce? Why get them sorted? Why do you need to have a discussion around them?
I think if I try to do this as simple as possible, if you want to have a financial agreement that is completely watertight forever and a day, and that doesn't allow either of you to come back and challenge it at a later date, you need to go through various steps and stages to achieve that. You need to go through financial disclosure. You need to have an agreement. You need to have that agreement drafted, and you then need the court to agree with that. That gives you a clean break consent order, and that is your guarantee. But if, for example, you don't do the disclosure correctly to start with, no matter the agreement that the court eventually signs off, you may leave yourself open to a potential legal challenge on the basis of non-disclosure. So doing the stages correctly is vital.
And I think that's what we try and do at Mediate UK is take the clients through the steps that the court and solicitors want them to do, so that they can get a chance of having a legally binding agreement at the end of it, which is what most people want. They want that certainty. What is the legal agreement that comes out from all of this?
So the legal agreement is called a consent order. So, and if you want to look at it a different way, it's an order of the court by consent of both parties. So it's something that you agreed to. Prior to that, in mediation, you get what's called an open financial statement, and you get a memorandum of understanding. Those two documents come from your mediation. They go to a solicitor who then drafts the consent order. Once the consent order is drafted, both parties sign it. It then goes into court, and the court then reviews it.
Okay, excellent. So the first step really is this disclosure, and we ask clients to do a income to tell us what their income is, and then to tell us what their forecast expenditure is. So just on the income part, what bits does that cover?
Just before we get into that, can I just explain that mediators and solicitors do work to different systems. So in mediation, we have a set of disclosure forms that we will send you. If you go to a solicitor, you're going to be given a Form E. Now, Form E just requires, the requirement for disclosure is the same, whichever set of documents you use. But the Form E can go into court, whereas our disclosure documents can't go into court. And I think that's the difference. In the mediation process, we convert your documents into something called an open financial statement, and that's the document that can go into court down the mediation route. So it's just, I think, important people understanding that the two different routes have different disclosure processes. Income. The requirement is that you need to disclose all income. And that's exactly what it states, all income. So if you're renting out a property, that's income. If you get child benefit, that's income. If you're being paid child maintenance by a previous partner, that's income. Now, you might find that a little unfair, but it's income. And you have to disclose all income.
And if I have a job that doesn't pay the same each month, if it's changeable, what do I disclose then?
What we would suggest now, the important thing here is that the mediators can tell you what your options are, but we can't make the decision for you. It's your disclosure. So you have to decide. And then when you talk about that in mediation, the other party is able to ask questions of your disclosure if they want to ask questions. What you could do, for example, is take an annual figure and simply divide it by 12. And you could do it that way. And that's probably the most common way that someone would do that.
Okay. And if I feel that I might be losing my job, or I'm concerned that there's redundancies going on, does that get taken into account?
It's a very, very common circumstance within mediation. We generally, as human beings, we sort of have a fear of the unknown. And in this process, you know, if you've been married for 20 years, your lives have been fairly well mapped out into the future. Suddenly they're not. And suddenly you're not quite sure what the future holds. And therefore you tend to worry more about what may or may not happen. All we can deal with in mediation is what we know today. And if something then does happen later on, then you have to cross that bridge when you come to it. But we work with the figures and we work with the job that you have today, because that's what we know.
Okay. And so if I don't disclose something, an income, and later on that becomes apparent, the disadvantage to that is that the subsequent agreement we reach can be called set aside, and you'd have to go through the whole process again. Is that right?
Broadly, yes. I mean, bearing in mind what we're trying to do is guide you through a process that's been very well developed over the years through the Ministry of Justice, the court system, the solicitors and the mediators. So this is a path well trodden. Let's take an example. Let's say you have a bank account that you have been putting money away in over the course of the last 20 years, and currently in there is sat £100,000. You feel that that's your money. You feel that you've saved that and you should retain that. Well, the law deals with how that should be treated within this process. And what the law requires is that that is disclosed. And it's important that it is disclosed. If you choose not to disclose it, the chances are further down the process, you are going to commit contempt of court. If that happens and it's proven in court, then the court can rewrite your agreement, make you go through the whole process again. They could fine you. They can make you pay all the costs. I mean, ultimately, contempt of court, they could imprison you. I've got to say, I've never heard of that in a divorce process. Don't know if it's how it happened, but I've not heard of it. But the sanctions are there. What you don't get is security. That's the key thing. What you want is security, and you want to know that once this is done, that's it. If you don't disclose something, you've got a doubt.
So we've covered income, and you need to show your income to get a legally binding agreement. So what about expenditure? How does that work?
This is the part that some people find really tricky and very difficult. What you're trying to do is to get an idea of what you think your expenditure might be post-settlement. Coming into mediation, some people genuinely will have some sort of an idea of what they hope will happen. So base everything on what you hope will happen. Expenditure is the one aspect that does tend to change as you move through the mediation process, because as things become clearer, you can adjust those figures to more accurate ones when you know what's going to happen. But initially, you need to try to estimate as best you can what you think it will cost you to live post settlement.
And this will include things like forecasting your energy bills for where you believe you're going to be living. You can do searches on the internet for a 2-bedroom property in an area to see what the council tax is likely to be, and so on.
It's a really good point, Alistair. There's a lot of help you can get online. Sites like Zoopla and Rightmove, for example, can tell you the average costs of things in certain areas, and it's fine using those for now, you know, and using it to help you complete your things. Another thing is to make sure that you're not duplicating costs in areas. So if you're putting down childcare costs for the children, don't both put it on your expenditure sheets. You need to know who's going to be accounting for them, so you're not double counting.
And the purpose for this is to sense check the agreement, because if they've split up the assets, but one party is going to be minus, I don't know, £1,000 every month to meet their reasonable needs, that's not a good agreement, and that might be turned away by the court.
Yes, mediation. The reason people come to mediation is they want to use a fair process that is non-adversarial, that enables them to reach an agreement that a court is likely to support. And reasonable is a word often used within this process. So expenditure needs to be reasonable. Let me give you a common example. In most relationships, not all, but in most, you get a very clear breadwinner and homemaker. So there is one party that has led in terms of generating the finance. There's another party who's led in terms of doing all the school runs and the childcare. It's not uncommon for the person who's been the homemaker to be concerned about whether or not they can put on their expenditure sheet a holiday with the children each year. And the question I would ask is, would a court find it reasonable that you budget to have one holiday with your children every year? Would a court find it reasonable for you to have 5 holidays with your children every year if the other parent is budgeting to have none? So it's about what's reasonable.
Okay. Do you need to do a expenditure exercise to get a legally binding consent order?
Technically, no, not through mediation, because your expenditure isn't an item that is shown into the court. But why wouldn't you want to make sure that your agreement is fair? And my view is what we're trying to do is help people understand that the agreement works for everybody. It works for both parents, it works for the children. And if you want to ensure that, you're going to have to do through a mediator something that we call a reality test, where you disclose your income, you disclose your expenditure, and you can understand the disposable income that you've got every month. And that's an important step.
Yeah, no, that all makes sense. Thanks, Ian. Let's have a look at disclosure of assets. So this is stuff that you own, correct?
Yes.
Excellent. Okay.
Or debts that you might have.
Or debt. So our disclosures will cover off assets that you own, and it's anything over £500.
Absolutely.
It covers off money that you owe or is owed to you.
Yes.
And we also ask for what we call your working accounts, which is details of your bank accounts, which we understand will fluctuate throughout the month. But we ask you to disclose those as well.
Yeah.
And they're treated a little bit differently, aren't they?
They are. So differentiating between current accounts, deposit stroke savings accounts, stocks and shares, insurance policies, things like that. We tend to break those out. The key thing with current accounts is that they tend to be what are called your working account. So you're every day you're paying bills, you might be taking money in, paying bills, whatever. Actually pinpointing the accuracy of what's in that account can be challenging, depending on the flows in and the flows out. So what we do is we say disclose it, and then we zero the balance. There isn't a predetermined number, but for example, if you've got £14,000 sat in a current account, is that truly a current account? Because we wouldn't ordinarily expect to find £14,000 in a current account, because normally they aren't interest-bearing accounts. So you might expect to find £4,000 in there, but £11,000 then would be in a deposit account, for example. So once the level of a current account gets above a certain amount, we're going to be asking whether or not that is a true current account and reflective of a working account.
So it doesn't matter which day of the month, because obviously if I disclose it, because if I get paid on the 30th, it's going to be higher, and then on the 29th of the following month, it's going to be a lot lower.
Yeah, absolutely. If one party discloses their current account the day after they've been paid, and the other parties disclose it the day before they get paid, those numbers are going to be vastly different. And that's another reason why we discount the current accounts.
Perfect. Okay. So some things are quite easy to value, like a car. You can go online, put your registration in, and you can usually get a valuation for that relatively straightforward. The thing with valuations is they need to be agreed between the couple.
Yeah.
But how would you value, say, a house?
Can I actually, just before we move away from cars, can I just talk about cars? So my wife recently sold her car. We went onto 3 online sites, and the difference between the top and the lowest was £3,000. So you need to be aware that if you are getting online valuations for your cars, use the same site, because otherwise you're not going to get some things. The one that we would always recommend is Parker's. In the good old days before the internet, there used to be a Parker's book, which all the dealers had, and that used to be the Bible. They are online, and if you use Parker's, I'm not so sure that too many people will disagree with that valuation. Now, can I ask you to tell me your question again? Because having to talk about cars, I forgot what the question was.
Of course, yeah. No, we were looking at how do I value a house or a property?
Okay, so if you've moved house recently, and let's say you've decided between you, well, we'll move now, we'll split the equity and whatever else, you take the value that you bought it for, and that would be the value because that's what you paid for it. But typically, yeah, a court would want the property valued in one of 2 ways. Either you appoint a chartered surveyor, and they would be a member of the Royal Institute of Chartered Surveyors, so they have the RICS badge, and one valuation from one chartered surveyor would be sufficient for a court. Typically, you will pay for that valuation. It's about £500. Second way is that you brief 3 estate agents and you ask them to value your property. At this stage, you do not know whether or not you are going to need to sell or not, and you just invite them in to give you a value in case you do sell. And you take those 3 valuations and you divide them by 3 to get an average.
And I think the 3 valuations is important. On my mother's place, there was £400,000 difference between the top value and the bottom value there. So again, that's why, yeah, that's why we do 3 valuations, and it's by agreement, isn't it? You know, you don't have to do it that way. If you agree on the value, that's fine.
So this is mediation. Mediation is all about what 2 people can agree. And if those 2 people sat in front of a mediator say, one party's got a value, second party's got a value, we're just going to put those 2 together and work on the average of those 2, that's absolutely fine. Now, what we will do as a mediator, good practice, would be for us in the property section of your MOU, your Memorandum of Understanding, is to write in there a mediator's note that states, we told you the way that the court would like you to do it, so 3 estate agents or 1 chartered surveyor. In mediation, you agreed not to follow that route, that you agreed to do it with 2 valuations only, and you both confirmed to the mediator that you understood the financial risks that you're entering into by doing so. The reason that's good practice is that it really prevents either one of you coming back at a later date and challenging it, because it's recorded what you did.
But there's another couple of areas which people get confused on how to value. The main one is pensions. Now, we could do a whole hour talking about pensions. We're not going to, but in a nutshell, how do I value my private pension, Ian?
You need to obtain from your pension provider something called a cash equivalent, often referred to as a CE. Now, it used to be really simple. You could get a CETV, a cash equivalent transfer value, or a CEB, cash equivalent balance. CEB was for a pension in payment, CETV was for a pension not in payment. For whatever reason, things changed. You now get a CE, a CEV, a CETV, a transfer value. The requirement of the court is that you get a cash equivalent. So that's any one of those other ones I've described. But you're unlikely to be able to get that online. You normally have to speak to your pension provider, tell them that you're going through a divorce process, and they will then send you a very thick pack. They have 3 months to provide you with a CE once you ask for it by law. It's a capital sum. It's the capital sum that is sat in your pension that you can call upon as part of a divorce settlement. You can't get the cash, but you can take into account the capital sum that's there. The one I've had most challenge with over the years are SIPs, so a self-invested personal pension plan, where they basically say they don't provide CEs. They give you a SIP valuation. Well, SIPs are cash. So whether you get a SIP valuation or whether you get a CE, it's going to be the same number because it's cash. But as our solicitor explained it to me once upon a time, the requirement of the court is to have a CE valuation. So if you're working with a SIP valuation, you need to let the court know that you're working with a SIP valuation, and then it's simply down to a judge as to whether or not they accept that or send you back to get a CE. I have had people say to me, my pension company says they don't issue CEs for SIPs. My standard phrase is, why don't you go back to the company and say, the court is asking for a CE, what do you suggest I tell the court? And suddenly a CE appears.
And my what happens if my solicitor says I need to get an actuary to value my pension?
You have a choice, and it is a choice. You don't have to, but there are certain guidelines. So in 2019, the Pensions Advisory Group reported to government on pensions on divorce. And what they said is that if you have a defined benefit scheme, so fund salary scheme, with more than £100,000 in it, you really ought to appoint an actuary to give you the true value of that pension. You can use an actuary, or you can use what's called a POD, Pensions on Divorce Expert. They are priced differently because they have different qualification levels. Timescales is different. An actuary typically will take 3 months to do all the calculations that are needed, and costs could be somewhere between £2,000 and £5,000. The benefit of having an actuary look at it when you have complex pensions or high value pensions, they look at the capital sum you have today and how that might split, but they also look at the pensions, and they calculate what the pensions are likely to be when they reach payment. So you can have 2 pensions today with the same capital sum, but that will pay out differently when you get to pensionable age. And the actuaries calculate that so as you have got all the information in front of you when you're making the decisions.
A question we're often asked, and I think we've covered this a little bit, but it's worth covering with pensions, is people say, look, we've decided we're going to keep pensions out of it. I'm going to keep mine. They're going to keep theirs. Do we have to do all this hassle of getting a pension valued?
So see this as two separate stages. The first stage is your financial disclosure. You must disclose everything in your financial disclosure. There isn't, if you don't, you're going to go back to where we started, which is potential contempt of court. But more than that, actually, and for me, it's if you don't do the disclosure properly, you don't have a secure agreement, because that agreement can be challenged on the basis of non-disclosure. And therefore, for the rest of your life, you are thinking if something happens, then a challenge could come. So getting the financial disclosure right is really important. And you need a cash equivalent to CE for your pensions, for your financial disclosure. Once you move into the second stage, financial settlement, this is your agreement. So if you want to then set pensions and say we're each going to keep our own pensions, that's absolutely fine. Bearing in mind that the chart that goes into your memorandum of understanding will include the pensions if you're keeping your own. And the very bottom line of that, in terms of how the percentages of your assets being split, that's what a court's going to be looking at to make sure that it's fair.
Well, let's go on to the division of assets, Ian. So we've heard lots of different stuff on this. It's always 60-40 to the woman is one that's commonly thrown around. It's 50-50. It's assets before the marriage aren't included. There's lots of things going around. Tell me if you can, in a nutshell, and knowing the answer, I know how difficult that is, but tell me in a nutshell, how does a court what does it look at when deciding division of assets?
The first thing I would say is that mediators aren't here to advise and guide. So we're not here to tell you what to do. We can say to you, this is what the law says, and then you make the decision knowing what the law says and what the law requires. And I would start this conversation by saying Matrimonial Causes Act 1973, Section 25. Your assets, all of your assets, have to be split according to your needs. The needs of any children are paramount and they come first, and then it's the needs of the parents. So that's what the law requires. On top of that, where courts come from is if you've got a long marriage, let's say 15 years plus, a court is going to start by saying all assets should be on the table with an even split, 50-50 split, and can both parties meet their needs from that division? And if they can't, that's when you then might start to adjust it. The court doesn't adjust it for you. You need to consider that before it goes into court. And if a court gets an agreement that they don't think is fair, they're likely then to ask some questions of the solicitor that sent in the documents, asking them to go back with some more information on how they think it's fair. I think for me, the other thing to recognise is that your solicitors have a job to do. And their job is to act in your best interests. And one solicitor can't represent both parties. So each solicitor, their job is to look at your circumstances, and their job is to see what is the best that they can get for you within those circumstances. And in that, of course, you are going to get all the vagaries of different advice and guidance depending upon the circumstances. This is the fascinating thing with family law. Every case is unique. No two cases are the same. And therefore, you get a myriad. When you speak to your friends and you find out what your friend's solicitor said when they divorced, and you're thinking, well, why hasn't mine told me this? Because it's unique. It's about what is your case and how can your solicitor give you best advice given those circumstances. That's why you get so many different views. But Matrimonial Causes Act, Section 25, needs length of marriage.
And the law is flexible to allow for all these different circumstances, situations, all these different family setups. And so by being so flexible, that's why it's very difficult to get a fixed answer on what is fair and what would be an outcome if you went to court. And really that's where mediation can help, because if you go to your solicitor, they're going to give you the best advice for your situation. The other party's solicitor is going to give the best for theirs. They're very likely to be different. And so mediation just says, okay, what is there? What have we got? How are we going to divide this up fairly to meet both your needs moving forwards? And then the legal advice can help feed into that as well.
And people do come into mediation. I've had people come into mediation who are scared of going to solicitors because they're afraid that they'll just try to get them into court and things like that. My experience is that solicitors do a good job. That's their job. Their job is to advise you. Their job is to advise you and tell you what is in your best interests. So yeah, and you should get legal advice. Remember, it's advice. So you can choose not to accept the advice. You can choose to accept the advice. And actually an agreement where you've got advice, you understand what the advice is, but you then make a choice not to follow that. That's an informed choice. So you've done everything correctly, and you're then making an informed choice about how you want to proceed. Mediation fundamentally is about what the two parties can agree.
Yeah. Okay. So let's say we've agreed how to divide up our assets. We've covered off our house, our pensions, any savings, and anything else over £500. What about this issue of spousal maintenance, of ongoing payments between that? How do you as a mediator cover that?
First thing to do is look at need. So the reality test that we talked about earlier is an important part of this. If you look at your income and your anticipated monthly expenditure, and one party is making a £2,000 loss every month, and the other party is making a £2,000 surplus, would a court find it reasonable that there is a spousal maintenance payment that equals that disposable income? So £1,000 moves across, or £2,000 moves across, and you get to a point where it balances. You'd look at your expenditure. You'd make sure the income was accurate. You'd be looking at the settlement. So what have you agreed, and has that impacted the expenditure figures at all? But you're looking first of all at that disposable income and whether or not either one party is going to be adversely affected. Can they afford the agreement that is in front of them? And if they can't afford it, but the other one can, is there money that can transfer?
And in mediation, the process of sorting out finances, we understand the importance of getting legal advice. We understand now why we need to get all our finances disclosed. What happens at that first meeting in mediation for finances?
This is where in mediation, the clients will start to see the finance that they're each disclosing for the first time. I often say it's a laborious but really necessary process, because what happens is that if you were in and this changes, this changed a bit when we moved to online mediation. When you used to be together in an office, the mediator would write this all up on a flip chart, so you'd both see it. What we now do is we tend to write it up onto an Excel spreadsheet whilst you are online. Some people find that a little tedious, but we are providing you with an environment which is safe, where you can ask questions of each other in a non-adversarial, non-challenging way. You know, if you thought there is a bank account with Santander that isn't on the disclosure sheet, this is where you ask for it. So that first meeting consists of the mediator putting up a disclosure sheet, which is different to the ones that you filled out. And the mediator will be asking you for the valuations that you've got from your estate agents. They will be inserting those values. They will be inserting the mortgage. They'll be calculating disbursement. So what would it cost if the property were going to sell? And you will get the equity value that is in the property. And that will show on the spreadsheet. They will then work through it. So they'll go through your bank accounts. They'll go through stocks and shares. They'll go through the cost of vehicles. They'll record everything in there. You in mediation, the clients, are acting as your own advocates. So if a client, for example, said that they'd got a 10-year-old Mini and they were valuing it at £200, it's not for the mediator to dispute that £200. That's your disclosure, and your disclosure is to each other. So the other party can dispute that value and discuss that. And that's the way mediation works. And you work through everything. So as you get all the way through, including pensions, you go through all the assets, all the liabilities, you record them all on screen. And from that meeting, hopefully, we will produce an open financial statement which records all of that information.
And I think a lot of people don't realize that first step is so important to be done with the mediator in a session, because it's protected, it's a safe environment. And if you were to do that through a solicitor, which would probably be on something called a Form E, that process is probably going to cost you over £1,000. So you're actually getting value by doing that and getting even if you don't get to an agreement on anything, if you can agree what there is, first of all, then you've already saved yourself a lot of money on the legal process. Would you agree?
Yeah. What you've just said, what's there? You need to agree what is there, because before you can get into any sort of settlement, you need to define what your assets are, because that's what you're trying to settle on. If you haven't defined them, how can you agree a settlement?
And do I show all my bank details and proofs to the mediator? Do they check them?
So it's not our job to verify your disclosures. And what should happen is that once you've gone through the disclosure, the mediator would then check that you are ready in all your documentation, and they will ask you to exchange between yourselves. You then get the open financial statement from the mediator, you get the disclosures from each other, and you are then able to check all of that finance. At the next mediation session, if you have any questions, that's when those questions would be answered.
And the next session, you can then start to look at the division of assets, and then finally the sense check and whether any ongoing payments are required. And you mentioned it earlier, I think the outcome from the mediation then is a open financial statement which shows what there is, and a memorandum of understanding which shows your agreement. Is that right?
Correct. Yes.
Okay. And at that point, you have the option of making it legally binding through a consent order. And you can use Mediate UK, one of our legal packages, to do a consent order. You can use your own solicitors, or there's some online options. Is that right?
That's correct. Yeah.
Okay. So,
sorry, just to explain, we have a clear distinction between the mediation part of it, and once your OS and MOU are done and agreed, the mediator's role then stops. The business support team, if you wanted to use one of the Mediate U packages, then it passes into the business support team, and they will help you work through that. But the role of the mediator at that point is then finished.
Okay. And how many hours roughly would that take to get to an agreement? Is there an average?
Yes, there is. I mean, on finances, I would say between 3 and 4 meetings. The meetings tend to be 90 minutes long.
Okay.
Most of the finance work that we do is completed in between 3 and 4 meetings.
And if we can't agree through mediation, by considering mediation or by attempting mediation, it opens up the route to go to court. How much and how long does it take to get a decision from a court?
this is a really tricky one. So how long is a piece of string? I mean, you are looking at probably a good 3 months before you're going to get a first hearing. First hearing is not going to give you any resolution because they're going to do the admin bits and pieces and then set up a potentially an FDR review and things like that. So, you could be a year away from an agreement when you're going through court. There are many other areas that you can look at. If mediation doesn't work, arbitration is a very, very good process. You could do lawyer-to-lawyer negotiation. You could do collaborative law. These are all options for you if mediation doesn't work. And mediation isn't right for every single client. And my view always is any of the alternatives are better than court.
And I think on our website we actually list out the 11 ways to reach an agreement.
We've gone to the extreme of showing you all the different ways, because from the FMC's perspective, there are probably 5 recognized dispute resolution processes. But one of those, for example, doesn't include family and friends helping you to mediate. And that's one of the 11 that we've got on our website, because sometimes you do within families have an honest broker who can work with both parties and save the cost and whatever else. And if that is what works for you, then that's fine.
So we've covered off why you need to disclose everything, and that's to make sure that your agreement is legally binding and can't be challenged. We've had a very brief look at how division of assets should be looked at, and then the importance of doing this reality check, your budgets in and out, to make sure your agreement stands a chance of working. Is there anything else from your perspective, Ian, that clients often ask or that you feel is important with finances?
I think there's a few things, if I can go through them quickly. Couples who are still living together where one party is a high earner, so the other party has stopped claiming child benefit. When you separate, the party on the lower income can start to reclaim child benefit, and therefore when you're doing your income figures, bear that in mind. On income bonus is often a source of contention, and people will often say, well, my bonus is discretionary, so it shouldn't be included. Where a court will come from, here's that word again, what is reasonable? If you've had your bonus for 4 of the last 5 years, is it reasonable to include it in your financial disclosure? If you've only had it once in the last 4 years, is it reasonable to include it in your financial disclosure? So just think about things like that. And this mediation is a transparent and open process. So we need you to be transparent and open. And if at any point we get a sense that you're not being, that can have some significant implications for mediation. Anticipated monthly expenditure. We give you a sheet that's broken down into accommodation, financial commitments, your utility costs, transport costs, household costs, personal costs, recreation. And we make it very clear in there that these can change as you move through mediation. Just be reasonable. Just be reasonable. If you're someone who has a lot of common sense and you're on an income of £40,000 a year, putting £20,000 in your disclosure for Christmas presents probably isn't reasonable. So just think about what is reasonable. When you look at assets and liabilities, I think one of the things that we haven't covered in depth, but is always a challenge, is how do you value a business? And businesses can be challenging. Are you a consultant, an IT consultant perhaps, who works with a number of different companies? You don't have a business with an asset value, but you do have a bank account, and you do have a credit card, and you do have a company car. So what is it that you disclose? If you have a business that is a manufacturing business, and you have plant and machinery, and you own the land, and you own the buildings, then there's going to be an asset value to that type of business, where there's unlikely to be much of an asset value with the first business where you're an IT consultant, because it's take you out of the business and no one's likely to buy it. So on the where there are assets, you have to get an accountant, chartered accountant, to value that business for you. where you're an IT consultant, you're going to be disclosing your bank accounts and anything that the business owns in terms of value, as long as it's over £500. So that's just an important thing to bear in mind. That you can get your accountant to value the business, doesn't mean to say that the other party is going to agree to it, because the other party does need to agree to it. So then there might be some discussion about whether or not that's a correct valuation or whatever. But a court, again, what's reasonable? A court would expect a valuation from a chartered accountant to be worth the paper that it's written on, because they will respect the position of that. Because if a chartered accountant were to lie, they're going to get struck off if they find out. So, you know, it's a fairly significant punishment. So the chartered professions, courts respect their expertise and their qualifications and their knowledge. Liabilities and capital gains tax, I think, are the only other two things on your assets and liabilities. You do need to disclose liabilities. You need to be aware that credit cards are only, the debt is by the person who signed the form. So you might have a joint card, but the second card holder is not liable for the debt. The primary person who took the card out is liable for the debt. Capital gains tax, you do need to take tax advice from a tax accountant to see whether or not you are liable for capital gains tax. And it's always just worth checking that.
And just for clarity on the credit card, whilst it's in the name of the account holder, so legally they have to pay it, the actual debt under family law would be discussed as part of the mediation. It doesn't get discounted.
Yes, it would. Yeah, certainly not discounted. No.
Yeah.
And that's again part of what you have to discuss and what you agree.
So I think there's lots to do with finances. It's a huge subject, and one really where you should be taking advice. Read up as much yourselves as you can. It's all about knowing all the options and making the best informed decisions on everything. There's a lot of information on mediateuk.co.uk website. There's a lot of blogs that we've written about pensions, about businesses, about valuing. So we go into a lot more detail there. You can get legal advice. You can get a written report on legal advice through Mediate UK from a chat on your own with a top solicitor. And also you can phone Mediate UK, book yourself in for a free 15-minute conversation, and they can talk to you about your specific situation and what options you have open to you. And of course, your mediator can give you the options and tell you, what other clients have done, what other people have done, what the court will look at. The one thing a mediator can't do is tell you what to do. The only person who can tell you what to do is a court. And we've established that to get to that stage will take about a year. I don't know if we mentioned the cost, but the average cost for that process would be £20,000 plus VAT. So best avoided, as Ian says. Ian, thank you so much for your insights today. We will be posting this up on the website. We hope you found it helpful. Please, if you've got any questions or comments, just put them in the comments at the bottom of the video, and or drop us a message at mediateuk.co.uk. Thank you very much.
Thank you very much. I hope this has been useful.